So jumping straight into Shib on the daily time frame, you can see right here that we have our end of bull market target, and that's sitting at about 0.0008719. I'm not quite sure how to say that number, but for the most part, that is where the 1.618 Fibonacci level is, which is just about here. So that is where the 1.618 Fibonacci level is. And if it was to get to that level, that would be approximately about a $33.6 billion market cap. And in terms of price percentage gains, you can see from this point in time, if it was to get up there, that would equal about a 2.9x right there. So about just under 3x for Shib if it was to get to that 1.618 level. Now, in terms of our thesis right here, it says that Shib is playing out very similar to Dogecoin, not in terms of price, but in terms of chart wise. So we're going to go and compare those two things today. But before we do that, I just want to go and talk about the circulating supply, because I think that's the reason why the price is so cheap. So I took a look at the circulating supply for Shib, and it was sitting at 1 quadrillion coins. I've never seen that many coins for a project before, for a crypto before. And the reason I think that was done by the founders was it was done purposely to create such a cheap price. So when there's so many coins in circulation, like a quadrillion coins, because there's such an oversupply of coins, it means that the price is going to be very, very cheap. So cheap that it's not even a cent. I don't even know how to say that number. So I think it was done purposely in order to make the price so cheap, look so cheap, that it attracted a lot of new people. Because when new people get into the space, typically they just look at the price and then they compare the price to something that's very similar. So for example, if someone was new to the space, they would see Shib, look at the price and say, wow, look at that. Look how cheap it is. If it was to get to Doge's price at 22 cents, you know, that would be amazing how much you'd make so much gains. But I've done some calculations here to say why that's kind of impossible. And it's because a lot of these people who kind of get in and look at Shib don't really look at the market caps, because market caps is the actual way to see how big a coin is and how big it could potentially get into the future. So comparing the market caps of Doge and Shib together, you can see Doge is sitting, I think, currently at like a 30 or $40 billion market cap, whereas Shib is sitting at a $12 billion market cap. So in order for Shib to get to Doge's current market cap, that would be, you know, approximately like a 3 point something X or 3 to 4X right there. So that's kind of like the limits as to how far it could go when you compare the two. It's not based on the price, it's based on the market cap. So the next thing here says that I did some calculations, and for those who think Shib will get to a price of Doge at 22 cents, that would have to make Shib's market cap about $85 trillion, which, to put it into perspective, is 85 times larger than Bitcoin, hence why I think it's pretty impossible. However, does that mean that Shib can't continue to go up in price? No. I actually think it's quite possible for Shib to get to that 1.618 Fibonacci level. We saw it with Doge, how it continued to get to like an $80 billion market cap. I remember that earlier this year. Dogecoin got to an $80 billion market cap. So that's quite a substantial rise from Shib's $12 billion market cap. So I still think that Shib definitely can go up, especially if a lot of retail starts coming in closer to the end of the year, when a lot of the euphoria starts to come in. I definitely think that Shib will receive a lot of that attention. So what I want to do right now is just take a look at Shib and Dogecoin side by side. And it's because they actually have very similar charts where they do these really big pumps, right? The huge pumps. And then you have these long consolidations where it doesn't do anything. It doesn't necessarily actually come down quite a lot, but it actually just goes sideways for a long time. Hence it consolidates sideways and it just touches these daily EMAs. And then after that, there's just another huge pump that happens. So it kind of literally looks like a staircase that goes up like that, where it goes pumps, it goes sideways, it pumps, it goes sideways, it pumps, it goes sideways. And that's typically what Doge look like. And I think that Shib may actually look like that as well. So let's go and compare those two. All right, so this is Doge and this is Shib side by side. You can see right here that for Doge and Shib, they both started out at these really high price points before literally falling off of the face of planet Earth right there. You can see they just literally fall. And then they have these huge consolidations right here, these long consolidations where they don't do anything and everyone just kind of accumulates. and then one day you just get that really big pump. And you can see that was kind of the same for Dogecoin. And the really interesting thing for Dogecoin is you can just see, this is on the weekly time frame, by the way, but you just see these huge green candles that happen literally in 1 week. So 1 to 2 weeks, because we're on the weekly time frame, each candle represents a week. So you can see one just big pump there, one big pump there, one big pump there, one big pump there. So Doge typically only pumps for about 1 week. So that is kind of like the way you have to time it if you're getting into Shib and Doge, is that they only really pump for 1 week after touching their EMAs right here. So you can see you could apply the same strategy for Shib and Doge right here, where Doge was adhering to its 20 EMA. You can see that 20 EMA, it held that bullish market structure right there. And you can see anytime it came up, it just had these consolidations sideways. It touched the 20 EMA right there, which is that yellow line. And then you got the big pump like that. And then it did it again. And then you got the big pump again. And then we had that big May drop right there. And you can see with Shib, it looks like it's doing the exact same thing, where this has pumped crazily in about a week. And then you can see right here that if this was to continue coming up like this, it would most likely touch it and then have yet another big pump. So that's kind of like the way I'm seeing it right now when it comes to comparing these two charts. All right, so the next thing that I want to go over is that at the moment, the pump has already happened. And you can see, obviously, the big pump has already happened. So if you're looking to get into Shib, what I would do is just wait. I would just wait for Shib to touch that 20 EMA, or for it to kind of just consolidate for a little bit longer, because there is a risk that this could continue to come down a little bit lower. Potentially, if it did break this 0.5 level down, let's say in terms of percentage wise, if it was to come down a little bit more, like a 30% correction, because these things are so volatile. Remember that these things are very volatile. They can swing down 30% and then swing back up 60%. And you can see right here that if it was to come down 32% right there, that would take it to, I don't even know what that number is again, 0.00002030 right there. So that could be a good place to pick up some Shib, but for the most part, I think that pump has kind of already happened. So just be a little bit more patient. So the last thing that I want to take a look at is the WRSIs, or the weekly relative strength index, indicating that the party could just be getting started. So if I just go bring up my weekly RSI right here, you can see that we literally just got to the top of this weekly RSI, and we've seen multiple times before where when getting to the top, typically these projects stay up here for quite a long time and they stay in this overbought section, and then they continue to go up, or they continue to go up and this starts to come back down and you get this big bearish divergence. So that is basically when the price continues to go up, but this continues to go down, and that's called a bearish divergence. It means that the prices are becoming very, very unsustainable. So just keep in mind of that. At the moment, I think that has just reached the top and the party could just be getting started. So there you go, guys. That's my video on Shib. At the moment, probably just wait for a little bit more consolidation, because a better pattern may actually occur. Maybe you get some sort of pennant, or maybe you get some sort of bullish triangle like that, and then you just wait for the 20 EMA to actually catch up, and potentially you might get another breakout. And the last thing here is just some food for thought when it comes to Shib and Doge, is that they actually may see less institutional manipulation, because institutions don't typically touch these coins because they're just way too risky. But in a sense, that kind of makes these meme coins a little bit easier to trade. So for example, you saw with Doge before that it just went up, it went sideways, and then it went up again, and it went up and went sideways. So it was very, very simple charts to trade, which in a sense may actually be easier for, newcomers to trade. I'm not saying that you should trade these charts, but it's just something that I noticed.